Arash Massoudi. Arash, good to chat with you guys again. You've been doing a great job talking about Softbank and what they are doing. What can you explain to our audience they are doing in the options market that would help us make sense of what we're seeing?
So let's just rewind it back. So Friday, obviously, we wrote the story saying that they were the so-called Nasdaq whale, and the whale, as it were. And effectively, what that meant was, so in August, they put out their 13F disclosures for their buying through the second quarter up to June 30th. And what you saw there was that they revealed they bought about $2 billion worth of just the stocks in U.S. and some Chinese tech companies, Amazon, Adobe, Netflix, Microsoft, usual suspects in the basket. But then subsequently, these rumors were ripping through the market that someone was buying these options contracts linked to some of these stocks. And it turned out SoftBank was one of these people buying at scale. And we revealed they bought roughly about $4 billion worth of premiums, $3 to $4 billion in premiums on these contracts. And since then, we also then wrote that they're up about $4 billion as of before kind of the sell-off Thursday, Friday. They were sitting on about $4 billion of trading gains, plus or minus $500 million going into the weekend. And subsequently, it looks like basically their own investors have not rewarded this, even though effectively they're up on this trading strategy. And what it effectively is telling us is that the market is starting to say that, wait a second, Masa Son spent the last 3 or 4 years telling us that he had this vision about startups, and he started this $100 billion fund, and all this investing would be in companies like WeWork and some of these other companies who are privately held, and they would list, and that was the future of SoftBank. And then all of a sudden, he starts disposing all these assets and has cash to play with this year, and he begins betting very heavily on the U.S. stock market and basically juicing the market rally through some of these options bets, which actually turned out to be profitable, but effectively have left the investors, in particular in Tokyo, feeling like SoftBank is basically now just a hedge fund. It has nothing to do with tech, visionary tech investments, but it's just riding the market with Masa Son. And so that's why you've seen the sell-off over the last 48 hours. But even internally, they're really not specifying or sharing a lot of details about who's in charge of this unit, this new asset management unit where all these bets are being made. It sounds like it's, from our sources, it's all Masa Son driving this. So it's quite an interesting
and Arash, I think what you're saying is important because there's two ways to look at this. One could say SoftBank's options bet may be responsible for the recent downturn that we have seen, or maybe it's more accurate to say SoftBank sort of semi-artificially drove up technology in the weeks prior. Which one would you think is more accurate?
It's hard to say right now. I mean, the sort of volumes, we're talking about notional positions of about $30 billion through the options contracts. So, it's only a fraction of what the options trading was in August, but it's still a huge amount, and it would have required some sort of hedging by the banks to buy the shares. So it's possible it contributed to the melt-up. I don't have any concrete evidence. I mean, it's hard to sort of, dictate say exactly what causes market movements. But what is for sure is SoftBank, which had been focused on private investing and in startups, has really shifted in the last few months with this excess cash they had from doing disposals from some of their big holdings into betting very heavily on the U.S. stock market.
When exactly did SoftBank go from, hey, let's invest in your company and try to make money years down the road to let's be some kind of high-speed trading hedge fund?
Yeah, well, it depends on who you ask. But basically what happened was, remember in March when the world was melting down and the stock market fell, SoftBank fell very, very heavily. And Masa Son, much of his shareholding is leveraged in margin loans. So he himself is personally exposed. He's the biggest shareholder. His entire fortune's wrapped up in SoftBank stocks. And he's borrowed heavily against that. So when SoftBank shares go crashing down, as they did in March with the rest of the market and way, way more than the rest of the market, he felt very squeezed to the point where he actually debated taking the company private with Elliott, the activist investors who are in the company. They chose not to do that, and instead they embarked on this plan to sell down a ton of their holdings. They've been liquidating part of their holdings in Alibaba, their Japanese telecoms company. They've done this contract to sell a huge amount of T-Mobile, which they own in the U.S., after the merger with Sprint. And so they're selling down these things. And the one thing with Masa Son you got to know is when he has money sitting in the bank account, he does not like it just sitting there. He puts it to work. And essentially over the last few months, that's when this began, these heavy, heavy bets. And they disclosed in August that they were starting, when they did their Q2 results, that they were starting this asset management arm. They gave very vague specifics. People internally are passing the buck in terms of who's on the team, who's not, who's been doing these trades, who's not. So it's not entirely clear, but Massa is driving this. That's the one thing we know for sure.